Welcome, everybody, to another episode of the From Adversity to Abundance podcast. I am your host, Jamie Bateman, and I am super excited today to have with us a special guest, Bry Shields of Hub International Insurance. Bry, how are you doing today?
I'm good. How are you doing, Jamie?
Doing great. I have a couple of podcasts today to do, and I'm pretty excited. I love doing this show and really diving into stories of particularly entrepreneurs who have had maybe not that straight line to success that you and I we were just talking about this before we hit record a little bit. So very excited to dive into your story and to get to know you better. So for our audience out there, I know we're a little bit limited on time, so let's get right to it. Who are you, and why should we listen to you?
Well, I don't know if you should or not. I guess the jury's still out on that. We'll let the audience decide on that. But as you said, I'm a sales producer with Hub International. We're the fifth largest insurance brokerage in the world, and I started an insurance agency and sold to them. So today I'm in an earn-out working for them, taking care of all the same clients. I live in Mobile, Alabama. My wife is a physician here, and we have three wonderful children, two girls and a boy. And so
Nice.
that's what I spend the majority of my time doing other than working.
Yeah, sounds good. Yeah. So I know you and I are in a mastermind together. I joined a few months ago, which has been awesome. So you and I met in Scottsdale a couple of months back. So that's been a very good experience for me. So looking forward to getting to know you better over the coming months and years. But so with regard to the you referred to your company that you built and then sold to your current employer. Hopefully I got the facts right there.
That's right, you did.
And so let's dive into that. I mean, what did that look like? Why insurance?
Yeah.
How did you get to starting your company?
Yeah. So, well, I sold insurance my whole life and my whole adult life after college, and worked for a local agency here in town, selling property and casualty, primarily commercial lines. And in 2017, I decided that I wanted to have that entrepreneurial itch, and I wanted to launch my own agency and build that up. And so I had big dreams about what that would become. Did not dream that I would be selling it 5 years later, but that turned out to be a blessing. But that was getting to that point was culminated from working in the industry. So I had clients, I had some history there.
Gotcha. So you got into insurance right out of college, and then so how long did you do that for before you decided to start your own?
Yeah, so in 2017, so from 2007, so about 9 or 10 years. I sold life insurance for a year or two. So if you count that, it's about 10. It was about 10 years.
Got it. And just kind of, since the audience is a lot of our audience is made up of entrepreneurs and investors and business people, what made you want to do that, go out on your own?
Oh yeah. Well, gosh, I've had of course, in that mastermind you and I are part of, I've taken those personality tests, and so I now know why. It's because of my
Right.
personality profile is suited for entrepreneurship and or sales. But what that kind of looked like for me was that I just wanted to be able to expand what I was doing and how I was doing it. Just selling the insurance inside the context of someone else's agency wasn't fully satisfying my desires for what I wanted to do with my life, basically how to fulfill my purpose in the highest and best way. And so that I didn't know if it was a good decision, but I figured I'll take a leap of faith and take a chance. And I have a risk-taking personality. So I think that people need to. I don't think it's something that some of these gurus out there make everyone feel like they need to go be an entrepreneur, but I think everybody needs to do what God has made them best at doing. I mean, I think that's what's important.
Yeah. So when you did, I completely agree. And, I think, it, it doesn't sell well, but the true answer is it's not a one size fits all,
Right.
solution. So it really depends. I end up saying it depends so much throughout my day now, with mortgage note investing and different things we do. It depends always seems to be the answer, but nobody wants to hear that, because they want a quick hit, quick solution. But when you did branch out on your own, I imagine it was somewhat of a clean break. In other words, you weren't working kind of your W-2 sales job or 1099 sales job and then simultaneously, build your business. I'm not, yeah, I guess
Right,
what I'm
right.
getting at is some people recommend, hey, you should have a side hustle. Other people recommend rip off the Band-Aid and just jump in. Do you have any thoughts there?
That's a great question. So I had a side hustle at first, and that's when I was kind of like, it's like that was that itch of wanting to go start and build something myself,
Mm-hmm.
that rather than just stepping in someone else's shoes was kind of how I thought of it. That may not be the right perspective for everyone, uh, but so I started a sunglasses brand with my brother-in-law and his brother, and realized that trying to do that while working another job was not easy to do. We didn't have the capital or experience. And so that ended up just not really going where we needed it to. So we sold out of that. We found some guys to come basically buy us out and take it over. And it's still going to this day. But that was my experience with the side hustle. Once I decided to go out on my own with insurance, it was kind of an all or nothing deal where I had to be like, okay, here's my plan, here's what I'm going to do. And then I wanted to go ahead and have everything set up just in case. Like, I was in a fortunate situation where the company I worked for was a local firm, and I knew the primary principal very, very well. He knew me since I was a baby. He and my dad grew up together, so it was kind of a close relationship, and that made it a lot easier for me. But I had just gotten to know how he thought and so well that I kind of figured that he would. I didn't know it. I just figured, was taking a risk. I figured that he would probably not make it super hard on me, and that he would maybe even be willing to sell me. In my business, the accounts are the value of a business, and so there's value to those. And as a sales producer, you have to sign non-solicitation agreements so that if you leave, you can't go just call those clients and take them without serious legal recourse. So I had to go to him and say, here's what I'm doing. Can I buy my accounts from you?
Your book of business, right?
The book of business, that's what we call it. That's right. And so it literally ended up how I predicted in my mind that it would go. I ended up getting the opportunity to purchase almost half of my book. And I was hoping it was going to end up being more, but it didn't, and that's fine. And it ended up being as fair as it could have been. And so but when I did go to him, I did at least have a few things set up already. So one kind of challenge that came up was I was not fully upfront with them about how much planning I had already done. Because there was so much of that trust there in that relationship. I think that they thought I was coming to them before I did anything.
Right.
What they didn't realize is I had to protect myself in case it didn't go well. So I wanted to have as many balls in the air already as possible.
Yeah, you want to have options.
Yeah, so they were kind of thrown off when I then made a public announcement of what I was doing, and then they cut me off and cut off my access to the computer and changed my key and all this stuff. And it was like, he called me and he was like, hey, don't take it personally, but I'm doing this because of what you just did. And I was like, it's fine. So that was, I wouldn't say that was any kind of, I mean, that's part of the adversity, I guess, having things happen that you don't expect. And so it's just uncomfortable.
Right. Now I can relate on some level as far as starting, in particular, one business that, there's a lot of planning and a lot of work that has to go into it. And so you may not be ready for various reasons to put that out to the world.
Right.
And so, yeah, there's sometimes a bit of a, conflicting interests, if you will.
Yeah, and look, there was nothing. I would do the exact same thing if I were in their shoes. And in fact,
Hmm.
it probably would have been harder on it from the
Yeah,
beginning. But they, uh, yeah. So that was just kind of an interesting experience. It was a learning
sure.
lesson for me. Like, okay, go ahead and be. Uh, I probably should have gone ahead and just told them up front
Right.
where I was
Yeah.
with it. You know.
Yeah. So, but then, so now all of a sudden you're cut off, and it's like, okay, it's go time, right? I mean,
Well, and
what's
it
going through
ended
your
up
head?
it ended up working out fine because then it was like, okay, yeah, let's go ahead and get on this thing and let's go through these accounts. And they did agree to sell me some my accounts, and they
Hmm.
didn't have to. A lot of
Yeah.
companies out there would have said, "Nah, good luck, have fun,"
Mm.
and
Yeah.
you can because I wouldn't have been able to go write those accounts without taking the pretty big legal risk.
Sure.
Um, so then
Right.
uh, I would have been in some hot water then. So I
Mm.
was able to get a loan to buy a portion of my book of business.
Hmm.
Um, so, starting out then where I quickly found myself was, okay, I don't have enough cash flow since I'm not getting my whole book and I have this huge loan. I don't have enough cash flow to hire an account manager. I also don't know one to go hire right now. And in my business, we have a lot of service that's required for these
Uh-huh.
commercial accounts. They need certificates. The problems come up on policies that we have to address. Renewals can be challenging at times.
Yeah.
So
So there's ongoing work. It's not just an upfront
that's right.
transaction. And
It's not
okay.
like life insurance where you sell a policy and then you don't have to talk to the person again. This is like an
Right.
ongoing relationship, especially with these commercial accounts. And so the but I just said, okay, I'll go do it. So, my old boss, he thought I might end up having some service issues. And um I
Mm.
can now see why he thought that, because I probably should have had more service issues than I did. But I overcame that by um, I worked a lot of
Mm.
hours, and
So at this point, sorry, so you're the only employee at this
yeah. So
point, right?
starting out, it was just me. So
Yeah.
yeah,
Yeah. So you worked a lot. I mean, and that's, I'm glad we can dive into this a little bit because, again, entrepreneurship is such a sexy term and it's exciting and everything. But I don't know how you get around I think most people who start a business, even though you've already referred to some advantages you may have had with connection and then being able to buy part of your book, it still takes a lot of work, and you can't just go hire someone for 50, $75,000 a year if you don't have those funds available or that cash flow, like you said.
right.
So what do? You buckle down and you work hard, right? So just kind of maybe give us a snapshot of the first year or two of the business, as far as like how many hours did you work? What did that look like?
Yeah, I don't know how many hours I worked. That might be a better question for my wife. I mean, she said I worked a lot because even when I wasn't at work, I was at work. It was
Yeah,
like I was. I I pretty much just worked and slept, and
gotcha.
occasionally would go do something fun just because I had to go relieve myself the
Yeah.
pressure at some point. I'd go do something enjoyable. Tried to keep exercising a little bit and things like that. But yeah, it was the first 6 to 12 months. To say it was a grind would be an understatement.
Mm. Gotcha.
I probably needed a bottle of Tums with me at all times. I was under quite a bit of stress, and because I had to go place all these policies with my own carriers, because another kind of nuance to my business is that you have to get contracts with every insurance company. You can't just go hang a shingle and say, I'm ready to write insurance. Like, you
Mm.
have to get actual contracts in place with every insurance company you want to write with. And then they have to want the accounts you brought to them. And if you purchase the accounts and they don't want it, you're in
You
some
just
trouble.
paid for
So
something that has no value.
yeah, and
Mm.
then another thing I had, so that was just a lot of work to get done. Um,
Sure.
Fortunately, now another risk I was taking was that I tried to call every account beforehand to find out if they want to come with me or not,
Mm.
and to get
Hmm.
their commitment before I went and purchased their account.
Hmm.
But
Right.
what ends up another kind of learning lesson there, and is what you picture it going a certain way, and it's like, well, what really ends up happening though is that people are people, and so you don't really know if they're telling you what you want to hear or if they're telling you what they really think. And
Right.
you're kind of asking them, you're putting them on the spot and asking them right away to make a decision. So
Sure. And
uh,
they may be telling the truth, and they may not really know themselves, what's going to
right,
happen.
right. And so we would have, and they also kind of feel like to some degree it's awkward for them because they're like, why are you putting me in the middle of this? Like,
Sure. Yeah.
if it's like I don't want to get in the middle of like an argument between y'all. And so,
Right. Right.
and then they think, well, if I do stay behind, I don't want to piss them off. Like so that's
Yeah.
these are the things that go through their head when you call them and ask them this. And so I would have people, most people would just say what they wanted. And like, obviously the people I was calling were the people I had the best relationships with. So they
Sure.
would say, the overwhelming majority would say, yeah, I'll go with you. And again, part of that could be that if you just call them and ask them that, they're going to say yes, right? Like, who knows?
Sure.
But a lot of them the ones I had really good relationships with, obviously were going to come with me no matter what,
Yeah.
or we're going to want to. But the there was some confusion because like my old employer would then call some of them, and we both knew we were doing this. We'd be like, okay, we're going to call this person too, and I'm going to call this person. Well, they'd call and they'd ask, and they'd say, no, that's fine, I'll just stay with you. And then I'd call and they'd say, no, I'm going with you. And then we'd have to go back and be like, wait a minute, you have to decide. Like, we're giving you, my employer's nice enough to let me do this,
Right.
but you have to be honest. Like, you're not going to hurt my feelings. And then like the one or two people that happened to were like, oh, no, I'll just go with you, bro. And so it was very awkward.
Yeah. So give us like you don't have to give us numbers as far as like your income and things like that, but what are we talking about from a percentage standpoint as far as like the first maybe year or two when you went out on your own compared to how you were doing before? What did that look like? I mean, you mentioned
Sure.
stress and work. What was your income like at that point from a business standpoint?
Yeah, I'll try to keep that kind of high level, mainly because
Sure.
having sold a business to group I work for, I have to be cognizant of the fact that I'm under
Yeah.
NDA and all that. They probably don't
Sure.
want published, but
Sure.
on a high level, I can tell you that when I launched the agency, initially my income went down by 4x. It
And
was
that's what I'm
cut.
trying to get to is like how the impact on the
Yeah,
family
yeah,
and
it
the
was cut by 25%. And the reason is because I already cut the book of business by half.
yeah.
And then I thought that I was going to be able to have less expenses than this big company I work for, right?
Sure.
Big agency. And they, as it turns out, no, my expenses were higher,
Hmm.
mainly because of my debt, right? I had this
I
huge
see.
debt service.
Sure. Sure.
And so if you looked on paper now, I had an income that was only maybe 20%, 30% below. So I did manage my expenses okay because my net income on paper that I had to pay taxes on, by the way,
Mm-hmm. Mm-hmm.
was a lot higher because I was paying
Mm-hmm.
principal and interest, right? And so with GAAP accounting, when you pay a loan back, the principal is just a payback of a loan. It's not
Mm-hmm.
deductible against your income. So, if you make a third of, if you cash flow a third of your net income, guess
Mm-hmm.
what happens? The IRS takes all your cash.
Right. And you're left holding the bag.
So that could give you a pretty good picture of where I was in the
Yeah.
first year.
Yeah. Absolutely. So that, I mean, but and that's very, I don't know if you were the single earner for your family, but
Thankfully I wasn't. Yeah.
gotcha. But either way, it's a lot of pressure. That's a lot of moving parts. It's a lot of work. So, and just because we are, I know, short on time today, walk us through from kind of through the end of,
Yeah. Yeah. Let's get to kind of the better
yeah.
part. All right. So I'm just seeing how much time passes when you start talking about this stuff. Yeah.
Yeah.
So fast forward, I did somehow manage, by the grace of God alone, to grow that agency
Hmm.
significantly from where I had to start with my purchase. And I got to a point where I said, okay. And the only reason I was able to do this in the first place is because my wife worked. And so I was able to then say, okay, but of course she was growing impatient with me because I'd given her these grand projections of my income and they weren't panning out.
Yeah.
Meanwhile, I end up getting into a niche within real estate, writing a lot of multifamily apartments, and that really helped me grow quite a bit. And all my clients were very happy with us. So all of that was going great on like a business perspective. And but this debt was just kind of crushing my cash flow. And so the lesson I learned from all this is you've got to spend enough time planning and projecting and be well capitalized, or have a plan for getting more capitalized as you need. Because I did end up getting to a point where I was able to hire an account manager. She still works for me today here at Hub and manages my accounts, and she is fantastic. And so,
nice.
It took me a couple of years to get to that point. But now I'm paying this big salary to this large, highly valued account manager. And so I could keep going and stay on this path, and it would be, I would have kept growing it, and it would have turned out to where I would have had a lot more income and cash flow than I ever had before. But it would have taken a couple more years. And then at the same time, though, what was happening, I didn't plan this, but I had people, if you go launch a business in the industry where you already have experience and you have some business already on the books, what happens is people immediately start calling you, trying to buy you like right away. So I had been like fending off people who wanted to talk to me. And really most people, all they wanted to do was buy my book of business, make me whole, and have me come be a producer for them. And I'm like, no, that just puts me right back where I was before. I'm not going backwards. Is how I saw that.
Right.
So, but then I started getting to a point where I was like, man, it would be nice to be just a producer and have that income again and have somebody else deal with the accounting and all the BS. But so I started to get interested in it, especially because I had my second child. And so, but then I found out that there were companies out there who really valued my business and didn't want to just get it for the cheapest price and hire me as a producer. If they could afford, they had a business model around acquisitions, and they could pay you a multiple as if you're a large agency, even though I wasn't, knowing that they're bringing you into their fold. They got the talent, but they also know that they get that recurring revenue, so they can pay for that. And so that's how I was able to, then I found these companies that will actually value your business and pay you for your business and not just be trying to get you out of debt and hire you.
Right. To set you back. So now, because actually, it's interesting. I was talking to my property manager yesterday, and he's got I know we're short on time, but he's got a construction side and he's got a property management side. And we were talking about kind of the future of his businesses and things like that. And the construction side, where he does actually more high-end projects, retail to actual homeowners, not as much investors. That's where he's integral to that company. His property management company, it's like, could be him or it could be someone else. It's the systems and the processes and more of a reoccurring revenue. So I guess you found a way to kind of navigate the fact that you were so integral as far as the adding value to your company. You found a way to navigate that where you could sell the business but still remain a producer for the.
Yeah, what it turned into was like when you're like in a dark tunnel where you're like, oh gosh, how do I get out of this thing? If you decide that that's something you want to do, that you're like, okay, my path out is that I want to sell to get out from under some of these things I don't want to do anymore, right? That's kind of where I was starting to lean towards. And it was like, okay, but then the world opens up when you go talk to the right buyers, and it's like, oh wow, this is actually like, this isn't just get me out of having to do things I don't want to do. This is like tremendous opportunity now, because like the company I'm with now, I mean, we have unbelievable resources. We have so many carriers. We have so many great, highly successful people that I get to go call and get help with on accounts. And so now I can go after large, complex accounts. And if I need help, I can call people and get help on it. And whereas before, I might have to turn away an account that falls outside my.
So your clients win as
far outside my scope of expertise. And so, and then even accounts that I do have, like I said, I write a lot of large property and apartment complexes, and there's different perspectives inside here now that I get to hear from other successful producers.
Yeah.
So I have really been able to do a lot over here now, and it's been a tremendous blessing.
It sounds like your clients win as well.
They did, yes.
So I know you can't disclose too many specifics, but can you give us kind of a just high level ballpark of what that looked like at the sale?
Yeah, so I'll just say this. I was making pretty good money out of, I mean, I was making pretty decent money, just like most people in sales at a young age. And my income got cut by 75%,
down to 25%, right? Yeah.
After the sale, I went back and I calculated what my average annual earnings were, accounting for the fact that I also, when I sell a business, I get to pay lower taxes. I exceeded my earnings from before by 50%.
Wow. So we're talking,
and I'm not even done yet because I'm in an earn out.
Nice. So we're talking like six times what the lowest was when you started your business, kind of thing.
Yes.
Something like that.
Yes.
Plus and then some. So,
and it's just because, again, a lot of my income was going into that loan, but so then the basis of that loan was paid down when I sold, right?
What kind of loan was that? Because you mentioned it several times.
Oh, it was just a local banker,
Gotcha.
who took a chance on me.
Got it. Okay. So, and again, we're heading towards wrapping up here. I know you've got to run. What else jumps out at you? You mentioned one or two lessons learned, but kind of looking back at particularly the adversity that you did have to overcome, from a financial or even family perspective. What are one or two lessons that you took away from that experience?
So I think the biggest lesson I've learned with all of this is that you really need to try to spend some time getting to know who you are and your personality, and then try to lean into your strengths, but also don't forget about your weaknesses, because they're going to get you, and you can modify your behavior to offset inclinations that you have, but you have to know yourself well enough to know that. And so, like, where I'm going with that is, my weakness is in planning. My strength is in getting enthusiastic and excited and jumping right in and going for it. And that's what makes me an entrepreneur and a salesperson. But we're highly extroverted, so I would say, kind of advice to anyone out there, I guess, unsolicited, would be that if you have the type of personality where you jump right in and go before thinking about things, spend a little time before you do it, as painful as it is, digging into the details and making plans and talking to people who have already done things, because I could have avoided some of the pain that I went through if I had done that.
Got it.
And if you are but again, if you're the opposite of that, don't take that advice. Like, if you are someone who over plans and over analyzes, then you need to get a little more uncomfortable with just moving forward and diving in and making just doing stuff, because you're already gonna plan things if that's your personality.
I see that in the real estate space and mortgage note space a lot. You have two ends of the spectrum. You have these kind of engineer types who I mentored a guy who he actively analyzed mortgage note deals to purchase for over 12 months, probably 120 deals he analyzed, not just a 10-second analysis. I'm talking deep dive, and he hadn't done anything yet, nothing to show for it. Right. I mean, and then you have the other extreme where people just jump in and don't even know what they're getting into. But so curious that as we wrap up here, when you started your business, did you have an idea? I know you didn't know exactly what it would look like, but did you have an idea that the end goal was to sell, or that really you weren't?
No, I didn't know. I knew that I had no idea that my business would be really worth much of anything until I got it much, much larger than it was.
Sure.
But I mean, I think, the reason why my business at the size it was worth a decent amount is because of my age. I'm in my 30s. And
Mm.
so I now understand the economics of it. I mean, a company looks at someone like mine and they go, well, yeah, I can pay you this multiple because you're in your 30s and you're going to work for us probably until you're 70. And so,
Gotcha.
you know, uh,
Sure.
yeah,
That makes
good
sense.
deal for all of us.
Yeah, no, that's great. Real quickly, some real rapid fire questions. What is a book or two that you would recommend for my audience?
Oh gosh, because I wasn't ready for that. And you said rapid fire.
Or a movie or a podcast or something you
Yeah. Well, I got to give a shout out to Wealth Without Wall Street. I think people need
there
to
you
be
go.
following their podcast.
Yeah.
They're following yours. They should follow that one.
Yeah,
That is
absolutely.
great information on building passive income and building your legacy for your life
Agreed.
financially. A book, I would say a book that any entrepreneur, which I assume that's probably who's following
Yeah.
this mostly, two books. One would be Traction.
Mm-hmm.
Um, that's a great book about building operating systems. And I should have read that 5.5 years ago before I started my business. I should have.
Yeah.
I could have, again, uh, made it a little bit more painless. Uh,
Yeah. I need to reread that
E-Myth
one.
is another one. So those are both
Yeah.
operational focused, but most people who are entrepreneurs are not operationally focused by
Mm.
nature.
Yeah.
So those are, I when I read I did read E-Myth beforehand, but I didn't know how to implement it because I don't think like an ops person.
Sure.
I
Got
now know how to do it, but I didn't.
it. Yeah. Now, so uh, what's your team look like today? It's just the two of you that kind of run
Yeah,
your
I
business.
have an account manager that helps with all my commercial accounts. I do have a small book of personal lines as well. It's not my primary focus, but I do write some home and auto type business. And so
Okay.
we have a personal lines department here in our Mobile office that helps me service those accounts as well. But
Got it.
75–80% of my clients are uh, commercial accounts. So
Gotcha.
anyone out there who's having problems with your insurance broker, insurance market's very hard right now. So if you're having any trouble with your business insurance, yeah, just throw
Yeah.
that out there. Anybody can look me
Yeah.
up and reach out to me if they need help.
Absolutely. Then where can they reach out to you?
They can find me on LinkedIn. They can also call me at the office. I'm
Yeah.
with Hub International in the Mobile, Alabama office.
Okay. And for the listeners, it's Bry Shields, Bry Shields. Um, and so what else would you like to leave our listeners with? Any other takeaways from this kind of your story of from
I
adversity
think
to abundance?
I think your podcast is going to do well in 2023 because I think a lot of people are anticipating that we're heading towards an economic slowdown.
Mm-hmm.
And so I would just say the only thing I would leave everyone here with is if you face adversity in your business, if you have problems this coming year, um, try to, I know it's hard, but try to not associate your identity and your value as a person with your success or the outcome of your success. It is not
Yeah,
tied to that. And
that's
so
that's
I just
very
want to
good.
make sure that people keep that in mind, that you can, uh, obviously your show is to inspire people. So
Right. Yeah, absolutely. That's very good advice. We had Mark Podolsky on, and that was one of the takeaways that when he went through the crash and really went through some hard financial times with his business, and that was his big takeaway was his business and his financial success does not equal his worth,
right.
um, unless you're doing well, right? No, I'm just kidding. um, so. All right, Bry. Well, thank you so much for joining us. I really appreciate it. I know you got to run, and I'd love to have you back on to have a follow up. And again, LinkedIn, Bry Shields, or Hub International. Anything else you want to plug before we wrap up?
No, this was good. This was fun. Thank you for having me on.
Absolutely. Thank you, Bry. And to our listeners out there, thanks for spending your most valuable resource with us, and that is your time. Thanks, everyone. Take care.